Let's break down today's action. We have Uri Landsman. He is Platinum Partners president, who will tell us why he's calling for a massive pause in the bull market and how to play it. Randy Warren, Warren Financial Service Chief Investment Officer. He's got 4 picks for you to add to your portfolio right now. And Lincoln Ellis, Green Square Capital Managing Director, joining us from the pits of the CME. Lincoln, you think this market is lowballing the cost of Ukraine in the Mideast? I mentioned the fact that when the president spoke, he didn't talk about increasing sanctions. That's when the market pulled off its lows. But still, I wonder whether all the bad news has been worked in.
Well, in the pits today and across really Europe, after Europe's close, it seemed to us that...
Can I interrupt you? I'm so sorry, Lincoln. We just got Netflix numbers. Let's go to Adam Shapiro. He's got them.
Yeah, it's a miss on earnings per share, Liz. $1.15 earnings per share. The street was expecting $1.16. The revenue right in line, $1.34 billion, and the street was expecting $1.34 billion. Trying to get the press release open now to give you more details, but those are the raw numbers.
Interesting, interesting. We are seeing after hours the stock coming down a bit, although it's fluctuating a little now. We are going to be waiting for these key numbers about subscribers. They were expecting close to 50 million streaming subscribers for the first time, Liz. That would be a milestone. Not sure whether or not they hit that or not. Of course, what's happened in Netflix is you're looking at this price. It has gone nothing but up in the past year. It is up about 21% year to date. This is an uncabling play. If you can live without your cable, Netflix is going to tell you how to do it. Liz.
We're getting guidance at the moment from Netflix. They see Q3 domestic streaming segment revenue of $877 million with a net addition of $1.33 million. That's for Q3. They're also saying they see Q3 totals, including DVD, EPS of 89 cents a share. The outlook sometimes is what people get tripped up on, but right now the stock is jumping, David.
Yeah.
It is jumping above what it closed at by a much wider margin.
3.5%.
Exactly, than we had seen at the initial pullback. So you look at that and you say, Randy Warren, this is a company that's discretionary. Okay, when people have to tighten their wallets, they might not spend as much on Netflix. Things look good here.
Yeah, I'm not a big Netflix fan. You know, I know that especially the younger generation, my kids and whatnot, they're all using it. The college kids are using it in their dorm rooms. They don't have access to cable, but they've got access to the internet. It's pretty compelling, but all in all, I think it's an expensive stock. So you're really taking a big risk if you're buying it up here.
Well, it's expensive, Lincoln, because of the fact that it's more... Okay, we're going to get to Chipotle in just a second, but it is a de-cabling play, is it not? I mean, if you want to get rid of the cable in your house, millions of people do. This is one way that might be able to do it, correct?
Yeah, that's absolutely right. And it's not so much discretionary, Liz. I think it actually becomes much more of a staple. If you think about television or cable in terms of its price point, right? It's like the way that a Starbucks latte ends up
hold on
fitting
one
into
second.
the family
We just
budget.
got
That's
Chipotle. They were expecting $3.08. Adam, how'd they do?
It's a big beat, $3.50 earnings per share. The street was expecting $3.08 because revenue was huge. It was $1.05 billion, Liz. Street was expecting $990 million. Their revenue was up 28% year over year for the same quarter. Same-store sales up 17.3%. But here's something to keep in mind. Food costs were 34.6% of revenue. That's an increase of 150 basis points driven by, as you know, the increased price for beef, avocado, and dairy products. Liz, back to you.
Okay, let me just, and that is a huge beat, and you can see that the stock is, the bid is at $628, David, and the close was $589.
A 6.5% jump here. Randy, you've been following this stock. What do you think?
I really like this stock. I mean, you've got to love the way they're revolutionizing the retail, call it a retail food industry. I mean, it's not just going to be about, you know, Mexican food provided to everybody in the United States. It's going to be about other types of food as well. So they're going to be expanding in the future, and there's lots of room to grow, even though this is also one of those expensive stocks, one of those momentum stocks.
I don't mean to just jump around back and forth, but part of the reason that Netflix is seeing a pretty significant jump here Couple of things. They're announcing all kinds of operations in Netflix Europe. So they're naming a bunch of names, Netflix Germany. And so this is definitely something that people were waiting to hear on. What is your European expansion? They have it. They are also announcing gift cards, physical gift cards in select stores in the U.S., Canada, Mexico, and Germany starting later this year. And there you go. It becomes something where people look at it and say, Lincoln, this is a company that is still thinking and still moving and hot on its toes.
Yeah, that's absolutely right, Liz. We talked about this last quarter, that European subscriber growth was absolutely going to be key to the growth of the multiple expansion of Netflix. And now, if you add into this that you can buy a card and gift it like you would iTunes or something of that nature, you have just created an entirely new revenue stream that is massively diversified right ahead of the holidays, probably looking at some very significant numbers towards the end of the year.
Uri, when you look at these numbers and you see how both Netflix and Chipotle did in their own right, totally different sectors, both of them, though, sending the stock higher. I know you were an ultra bear here. Isn't there any temptation to get into a market like this?
Well, look, I think there's a lot of temptation, and that's why the market keeps on going up. And I've said that the consumer is really going to be the swing here. We have a couple of consumer stocks here doing well, and so that's definitely something to watch. For this market to have another leg up and surge through the 2,000 level on the S&P, it's certainly going to have to come from consumer demand, and these are, two pieces of evidence that the consumer might be gaining strength. So it's something, we're certainly going to watch closely. That said, it's not enough to make me believe that we aren't going to see some kind of fairly major correction over the next 3-4 months.
Uri, and you're not wrong when you point out all of the concerns and worries. You talk about what you say will be a fairly significant correction, 3 to 4 months. How much?
Yeah, so I could see the S&P trading down to somewhere between the 1,650 and 1,700 level from today's 1,970 odd points. By October. So. Over the next 3 months, that's when I'd look for a correction. I don't think it's the end of this bull market, but I think this market needs to pause, regroup a lot lower before it can surge through the 2,000 level.
But, Lincoln, look at these numbers. We got Netflix. If we can switch to Chipotle on here, because Chipotle is now up 8% after hours, based on some real significant earnings. And it's not just pie in the sky. This isn't talking about future forecasts. This is based on what the consumer is doing now, Lincoln.
Yeah, but David, think about this. This is where Murray may actually be right. If you look at all of the sectors of the S&P 500, consumer discretionary, the worst performing, just barely in the green for the year. And these two stocks in particular, very low price points, not so sensitive to wage gains or wage losses or job gains or job losses. So these stocks moving higher, but the discretionary piece of the puzzle absolutely flatlined for this year actually portends something very different. All the defensive names, with the exception of technology, up about 8% for the year, have been the winners this year. It's yield, it's about cash flow, and it's about defense. We haven't really seen anything that would suggest large-scale consumptive growth off the back of wage gains or job gains. And so that growth is really tied to GDP, and some sort of significant pause or some sort of tremor in the system could trigger the kind of pullback that Murray's talking about.
Okay, now we know where everybody stands. Let's get the picks. And Randy, you already expressed that you really like Chipotle, but you've got a bunch of names that you've brought to us, and I was looking at all of these, and I said, they're up pretty significantly over the last year. Everything from Pioneer Natural Resources up 43% year over year, Concho Resources, Intel, Apple. Apple's up 55%. They're reporting tomorrow. So what runs through these that makes you feel that they have more room to run?
What we're seeing is just a series of good earnings, but it's also mixed with concern, as you're hearing from our other guests. The concern with geopolitical uncertainty, and is the market fully valued? And there's just a tremendous amount of concern. We're kind of calling this all the imperfect storm. And what it really calls for is for investors to have a plan. You need to have a plan. You need to know what stocks you're in. You need to know why you're in these stocks. And you need to have a hedging strategy that you can put on in case there is that pullback. The market is valued well right here. It's not overvalued. It's not crazy like 1999 or anything like that, but it's valued fully. So, you need to have a plan, need to have a strategy, and that's what we're talking about with our investors.
We have to leave it at that. By the way, Uri's big on gold. He likes the spider gold, and the Bank of America agrees with him. He says that the worst of the gold price is over. So